Yes, yes, yes. We're back. Guess who's back? Guess who's back? Hey, my peoples out there. Hey, you know, happy to be back. It's another Tuesday, of course. Let's get into it. Today's Mortgage Mayhem episode is stacked. Ohio favors private school buses over public kids. AT&T has $177 million payout, could mean 7,500 for you. And Texas will start suspending homeless students. And we've also got lawsuit scams, redistricting wars, and why young male grads are suddenly jobless. Plus, four brand new viral mortgage hacks you've never heard before. And of course, our deep dive today is on RCN Capital, one of the biggest names in private lending. So let's get to it, folks. Got a little house cleaning we got to do before we get started.
Welcome to the Mortgage Mayhem podcast, where the mortgage game meets real life, real talk, and a whole lot of chaos. We break down the deals, the drama, and the data behind the scenes of real estate finance, with a twist of street smarts, savvy, and a touch of madness. Before we dive in, here's the deal. The Mortgage Mayhem podcast is for informational and entertainment purposes only. We are not attorneys, CPAs, or licensed financial advisors, and nothing you hear on this show should be taken as legal, financial, or investment advice. Always consult a licensed professional before making financial decisions.
All right, so hopefully everybody got that. Let's get into this thing. All right. Let me pull up. What's our first? There we go. Ohio requires buses for private school kids. Public school students have to find their own ride. A state transportation policy in Ohio is sparking outrage after revelations that private school students are guaranteed school bus services while many public school students must find their own way to class. Crazy work. Under state law, districts are required to provide bus transportation to eligible students attending charter, non-public private schools. However, due to the budget restraints, driver shortages, and district-level decisions, many public school students are left without district-provided transportation, forcing families to arrange carpools, walks, or rely on public transit. Critics say the policy reflects an imbalance in priorities, favoring public education at the expense of public school accessibility. Supporters argue that the requirements for private school transportation ensures equitable access for all Ohio's children whose schools may be farther from home. The debate comes amid broader conversation about school funding fairness and the state's obligation to serve both public and private school communities. Okay, now this is crazy to me because why are we picking and choosing how these kids get to school? This just got to be, I'm not going to even think about it, but I know this has got to be some more Republican stuff that's going on down in Ohio. Because why else would all of a sudden the private school kids get right to get bus transportation into schools, and then the non-public schools got to figure it out? I don't know what's going on with this country right now. It just seems like it's just getting crazier and crazier by the day. It just seems like we're just going backwards. And I just don't understand it when this is a country where progress is a running theme. Everybody that's in the mix as far as politics, as far as just everyday individuals living life, to me, it just seems like we were heading on a path of, everybody getting the kind of treatment that they deserve to get based off of their race. And now all of a sudden, we're because there's a whole new, thing going on in the world as far as, with this new administration, it just seems like bits of racism is just, rearing its ugly head every so often because the majority of the folks who are going to these public schools are people of color. And if the shoe's on the other foot, I just don't think this would be happening. But because the majority of the individuals that are attending public schools are people of color, it just seems like the city or the state, whoever is coming up with this, has made a decision to, go towards private schools where the majority or big, vast majority, and I went to the private school, so I'm not against private schools, but I just want it to be an even playing field, especially when it comes to transportation. This is crazy. How do we expect the world to get better? How we expect our public schools to get better if we can't even get the kids to the school? So to me, this just doesn't make a whole lot of sense. I don't know who came up with this, but whoever came up with this ought to be ashamed and ought to be put on Front Street so everybody can see that we do have folks that, to me, seem to be, borderline racist. That's what it seems to me because we all know who's attending the public schools and we all know who's attending the private schools. So we're going to keep our eye on this. Hopefully this doesn't go into law or whatever the case may be. However, they're trying to get this across the finish line. Hopefully someone will step up and stop this from occurring because this is not fair. It's not fair to the students. It's not fair to the parents. Because at the end of the day, transportation is there to make sure that these individuals are able to get to class and get an education so they can be productive out here in the world. So, whatever is going on here, I hope that they get it together, but we'll definitely be keeping a very close eye on it. All right, guys. All right, let's keep this thing moving. Okay. Where are we at? Oh. All right, so AT&T to pay 177 million for data breach and class actions, up to 7,500 payout per customer. Find out if you qualify. AT&T has agreed to pay 177 million to settle claims related to two major data breaches in 2024 that exposed sensitive customer information. The settlement provides financial compensation to affected individuals, with the amount depending on documented losses and the number of claims submitted. Background: the first breach, discovered on March 30th, 2024, exposed personal details including names, social security numbers, and account information. The second incident, reported on July 12, 2024, involved the unauthorized access of computer call records, payout details. First breach, March 2024. Customers may claim up to $5,000 for documented losses or opt for a tiered cash payment if no documentation is provided. Second breach, July 2024. Customers may claim up to $2,500 for documented losses or received a tiered. The exact payment amounts will be determined based on the total number of valid claims filed. Eligibility and claim process individuals impacted by either breach will be received an official notice by email or mail from Crow's Settlement Administration by October 2025. Claims must be filled online no later than November 18th, 2025. I just wanted to kind of bring it up just so folks, any kind of extra, monies that can come in, based off of somebody's, not, protecting your information like they supposed to, and for people to, just have breaches where I don't know if 7,500 is enough, to be honest with you, because you never know what these people can be doing with your, your information. Identity theft is always running rapid. So, this is, a good first step. AT&T are, stepping up and reporting the, what has occurred, and they're holding themselves, responsible. So I just wanted to bring it up. So if people out there have any kind of, ties with AT&T, this might be an opportunity for you, to walk away with some moolah, because, it ain't your fault that they didn't have the kind of systems in place to stop this kind of breach from occurring. They're too big, to be having this to happen. So 177 million, it's a lot of moolah to be just given to folks, because you're not handling your technology, appropriately, where you can't stop folks from hacking into your systems and getting innocent folks' information. And who knows what might be happening out on the black market with people's social security numbers, things of that nature. So AT&T, get your ish together. But we'll keep an eye on this. Like I said, I really just wanted to bring it to the forefront. So if anybody out there has anything to do with AT&T, you have till October to do what you need to do, and get your funds back. Get some funds back from the issues that they're having. So we'll keep an eye on that one as well. If anything comes down the pike, additional information to help you with your claim. When we come back here next Tuesday, I'll update it, and you guys can get in where you fit in. All right. Okay. Let's keep it moving. All right. Texas. Oh, Texas. All right. So Texas will start suspending students who are homeless or come from unstable homes in September. So starting in September, it will be easier for schools in Texas to suspend younger students and those without stable homes. A new law, House Bill 6, allows out of school suspensions for students below third grade and those deemed homeless under a federal law that help schools assist homeless children. This new bill gets rid of that previous law from 2019, which made it very hard to suspend homeless students, allowing it only in serious cases involving violence, drugs, or weapons. The aim of this new law is to help teachers manage their classrooms better, whatever, especially after issues caused by the pandemic. Even though the old law will no longer be enforced, some San Antonio school districts are still dealing with consequences for not following it. For instance, each Central Independent School District and Northside Independent School District are currently under plans to fix issues because they wrongfully suspended homeless students. Defining who qualifies as homeless can be tricky, as different schools might have varying criteria. According to the McKinney-Vento Act, a homeless student is someone who does not have a regular or adequate place to sleep, such as living in a motel, a car, or staying with other families due to money problems. All right, so Texas is going Texas. They got so much going on right now, redistricting this. And as far as this is concerned, I, I get it, but you got to have solutions, right? You got to have things that people who are homeless but are still trying to get their kids to school, still trying to get them educated, but because of whatever the reasons may be, they're deemed homeless, right? You know, I've been kind of like on the homeless side here lately because we just hired 2 homeless folks to work in our independent living facility. And to be honest with you, they're some of the best employees that we've had. So I just think giving opportunity to the homeless, especially after you become homeless, if you don't have some kind of mental issue, you're just looking for you're looking for opportunity to get back up on your feet. And the last thing you need to be worrying about is your child being suspended because you haven't done that, you know, you haven't gotten back up on your feet just yet. So I understand that they're trying to, kind of derail folks from, having their kids out here homeless. I don't know if this is a motivational piece to help folks who are homeless to try to figure things out quicker. But I think if this is going to be a law that's, adopted by Texas, not only should they just be kicking folks out, they should be giving folks some opportunities. Because a lot of times, the big thing about being homeless is you just don't have an opportunity, or you just don't have opportunities. You know what I'm saying? So, although it might be a way to kind of help folks, but it's not going to help you if you don't get, excuse me, you're not going to be able to help folks if you don't give them an opportunity to work, an opportunity, to do the things that they need to do to get back up on their feet. So we'll definitely keep an eye on that. We wish, the families out there, we wish them well because it's tough out there. The world is a tough place to be in. Everybody don't have the same opportunities as the next person. So you got to have a little grace, or you got to give people a little grace, and you got to have some empathy when it comes to, the homeless population. Not just kick them, even more when they're down, but give them an opportunity to, get out of the situation that they're in, grab their bootstraps, and do the things that they need to do so they don't have to, be homeless or, you know, be in that situation because nobody, wants to be homeless, but everybody is not too far away from it. Certain things could happen, how, just how life just be life, right? So you just got to be mindful of that, and you got to have some compassion. You got to have some empathy for people. So yeah, we'll keep our eye on that one as well. But like I said, I kind of somewhat get it, but at the same time, if you're going to do this, then you have to have some things that folks can tap into to help them get out of their situation. All right. Okay. Let's keep it moving. All right. So let's go to our guy here. This guy right here. Gavin Newsom mocks Trump and confirms he's redrawing congressional maps. And he really, man, this guy right here, man, he's been doing his big one. This is just a display of how he's been mocking Trump right here. Look at this. Donald Taco Trump, as many called him, missed the deadline. California will now draw new, more beautiful maps. They will be historic as they will end the Trump presidency. Dems take back the House. Big press conference this week with powerful Dems and Gavin Newsom, your favorite governor. That will be devastating for MAGA. Thank you for your attention to this matter. GN. So basically, Gavin Newsom is doing his best Trump impressions and giving the president a taste of his own medicine. Newsom mocked Trump on Twitter for missing his deadline. The governor of California demanded that the president stand down from the redistricting fight he started in Texas. Gavin Newsom said in his Trump voice The newly drawn district in California will be more beautiful, and said he will host a press conference, which he's already did, to announce the move. Well, in this case, it's so funny because for the first time, I mean, it's the writing's been all over the wall. We just needed somebody to step up and just be the counter punch for the president and all the things that he's out here doing on social media, all the wilding out that he's been doing, all the lies, all the pettiness. So to see somebody else, especially get a person like Gavin Newsom, who's I've always thought he was thorough, like even during the presidency. I just kind of the way he knows how to fight. He knows how to fight a Republican because most Democrats don't know how to fight a Republican. That's why typically Republicans wipe up the floor with Democrats because Democrats are too nice and Republicans don't care about niceties in any kind of way. All they care about is winning and power. I don't want to just say that that's all they care about, but the majority of them, that's what they care about. And if you try to get in the way of that power and their, remaining in office, they will cut you off at the knees. And I just don't understand how the Democrats haven't learned how to fight Republicans back. You know how to fight them back? You fight them back like this. This is how you fight them back. People might say, "Oh, he's being petty." Nobody can say anybody's being petty with this new administration. They've taken petty to a whole nother level. So if anybody's out here talking about Gavin Newsom is being petty and you just hating. You're hating the fact that somebody has, just conjure up enough kahunas to take the president on one-on-one and to beat him at his own game, to play the game the way that he has decided that the game should be played. Really, no rules. You do what you want to do. You ignore the laws. You create, chaos all over the place. To take your eye off of important things like the Epstein's file, so on and so forth. And to see this man who really cares about the country, the governor of California, to step up and, do the job for us. Because everything that he's saying, everything that he's doing, they all want to do it. And the Democrats been wanting to do it. They've seen this man in office once. They've impeached him twice. They know how he get down. And for some reason, they act as if they don't know what to do. It just all sitting on their thumbs. Like I said, Crockett, Miss Crockett, she's one who really is not sitting on her thumbs. But if they do what they're supposed to be doing in Texas, they about to get her up and out of here. The redistricting map that they're looking at doing in Texas is going to take her out. So for him to, be the governor and to stand up to this man, this is exactly what the country needs. Because for whatever reason, everybody else just allows him to just punch him in the face, and just keep it moving. That comes from the press, that comes from the media, that comes from all the politicians, Republicans, Democrats, but more so than anything, the people who should be fighting the most is the Democrats. It's so crazy. Where are they? I see a couple of them pop out, a couple rising stars, but for the most part, the main ones, the Schumers of the world, they are, I don't know if they've gotten older and they just don't have to fight no more, or they just don't know how to go about doing it, or if they just allowing the president just to, paint this narrative that in their minds is going to catch up to them eventually. But in the meantime, in between time, I like this Gavin Newsom play. I like how he's going about this business. He's on Trump's head top. He's on the president's head top. and a democratic country, a country that has democracy like we have, it's freedom of speech. You can fight your opponents as long as you're not doing anything physical. But if you want to troll them, if you want to play the games that he's playing, if you can legally do them, like it seems like the governor is in the process of doing, he's just beating them at his own game. He thought, I guess the president really and truly thought that he thinks that everybody is so punked because, he's vindictive like that. He's just one of those type of individuals that, bullying is what he does. And from what we could tell, he got everybody in both parties pretty much punked. It seems like to me the only person that ain't punked is that guy right there. Right there. He is bringing it. And it's not just every now and then. It's like every day he's on his head top. So we'll keep an eye on it. And, if something happens along the way, by the time we come and see you again, we'll bring it to the forefront. All right. Let's keep it moving. Keep getting at him, Gavin. Though. Keep getting at him. Somebody got to do it. All right. So this ex-Detroit Riverfront CFO William Smith loses bid to stay out of prison. We have brought this to you guys. The only reason I'm bringing it up because we had reported on it a while back. And like I said, I almost did business with this guy, back in the day. I'm glad I did. I'm so glad I did. But a federal judge Monday refused to let former Detroit Riverfront Conservancy Chief Financial Officer William Smith stay out of prison longer and ordered him to surrender Tuesday to start serving his federal sentence for one of the largest heists in modern Detroit history. U.S. District Judge Susan DeClercq refused Smith's request to extend his self-surrender date for a reasonable period of time so he can receive and recover from an unspecified medical treatment. The judge noted Smith, 52, originally was supposed to report to prison June 12th, but received a 60-day extension to receive medical treatment. This guy trying to do whatever. He received such medical treatment, the judge wrote, and he admits that the additional treatment he seeks might possibly be available in the Bureau of Prisons. Indeed, the government confirmed that the additional treatment is available through the Bureau of Prisons. Thus, he has not shown any basis to extend his report date a second time, the judge added. The request for more time unfolded largely in private because Smith's request and the government's response were sealed in federal court. The debate also happened 4 months after Smith was sentenced to 19 years in federal prison for stealing $44.3 million that was supposed to be spent revitalizing the city's industrial riverfront. The sentence exceeded the 18 years sought by federal prosecutors, but fell 1 year short of the 20-year maximum sentence sought by conservancy officials. But Smith was ordered to pay more than $48 million amid search for assets that so far has recovered more than $649,000 in retirement accounts, jewelry, luxury purses, rental homes in Detroit, a Southfield nightclub Smith owned, a $1.5 million mansion in Novi, a yacht, homes and real estate in Mexico, Atlanta, Texas, and Michigan's Black Eden. The assets are being liquidated, but the majority of them are saddled with costly mortgages, according to prosecutors, who expected the conservancy will recoup $2 million to $3 million. That's crazy work. So out of 40 million, 44.3 million, they are only looking at recouping 2 to 3 million. I ain't gonna even put my finger on the scale on this one, but it sounds like after these 19 years, my boy is gone. Well, he ain't my boy, but my guy or the guy will be probably still in the monies. I don't know how or what he's done, but he was out here getting it in. Luxury purses, rental homes, nightclubs, mansions, yachts, real estate in Mexico, Atlanta, Texas, Michigan, Black Eden, which is a pretty predominant area. So, I just, this guy, I was so close to doing business with him. I just thought we'll kind of update from the last time we talked about this. I mean, because at the end of the day, this guy did a big one. He really hurt, Detroit in a big way. 44 million that could have went towards, downtown, revitalizing that area is, such a sad thing where greed just came in. And at the end of the day, yeah, he's going to do 20 years. But the city of Detroit is taking the biggest loss, right? 20 years, you get to go probably in some plush federal prison, where 20 years is 20 years. I don't care what prison it is. But, for him to steal 44 million from the people is diabolical. He deserves whatever he gets. And we'll keep our eye on it. But I think this might be the end of this. I think this was his last attempt to try to stay out here in the real world, and it no longer and it's no longer working, or it was no longer working for the judge. And she went on ahead and put the slap down on him. So from what I can tell, he's up in that thing right now, wishing that he would have been smarter about going about his business. So, 2 million, 3 million out of 44 million, that's steep. That's still a long ways away from 44 million that was taken. So, we'll keep our eye on it. All right, let's keep this thing moving. All right, what we got here? Okay. Young male college grads ages 22 through 27 now at the same unemployment rate as non-college grads. Did you hear that? Young male college grads ages 22 to 27 is now at the same unemployment rate as non-college grads. Right. So the recent labor market data shows a surprising and troubling shift for young male college graduates in the U.S. Men aged 22 to 27 who hold a degree are now experiencing the same unemployment rate as those without a college diploma. Traditionally, higher education offered a clear employment advantage, but this gap has effectively closed. Their unemployment rate, which used to be under 5%, has climbed to around 7%, matching that of non-grads. Analysts point to several factors driving this change. While some initially blamed technological disruptions like generative AI and tech sector shifts, deeper analysis suggests structural differences in job growth between men and women. Women have found more opportunities in expanding fields such as healthcare and education, while employment prospects for recent male graduates have stagnated, particularly in industries like manufacturing, finance, and certain areas of tech. Overall, unemployment among all recent grads ages 22 to 27 has risen to about 5.8%, highest level since 2012 outside of the pandemic years. This figure is now on par with, and in some cases above, the unemployment rate for individuals with a high school diploma, without a high school diploma. The data underscores a weakening of the so-called college degree premium and raises concern about the return on investment for higher education for young men in particular. This is a problem. Yeah, this is a problem. I don't know really what's going on out here in the world, but folks go to school in hopes that I just think the world has been reshaped, right? You can't discount education. Education is education, right? The more educated you are, the more opportunities you should have, right? But nowadays, it's so many different ways to get to the bag where most people look at a college education as a waste of money, right? But what they're going to realize is that once college is good for the education part for sure, but college to me is more so what you get outside of the classroom that molds you into the type of person or the type of individual you should be out in society, right? You get so many different skill sets by just being in that environment where you learn how to take care of yourself. You learn how to be in different types of relationships. And then you get the educational part as well. But what I think is happening, the individuals who are not going to college or who didn't finish high school or who did finish high school, they just have, you know, different opportunities now. They're, the ones who are finishing high school, they're not thinking about college. They're thinking about, other things, plumbing, electrical, all the things that we've talked about before, where people have the opportunity to do other things. Now you got social media, you got like the space that I'm in, where people can just be normal individuals and potentially make a living by doing something else outside of going to college, getting a degree, and then going out into the workforce. And then I just think, the individual owners of these companies, like they said, females are doing better than males because I think males kind of bring a different kind of ego to the table when it comes to interviewing for these jobs and going after these positions. And a lot of times these folks who are hiring, they tend to be intimidated by it. So it doesn't help that that is the case, and I'm assuming that a lot of this is because of that, because these individuals have skill sets. These individuals have went to college to get whatever degree that they went about getting in order to get out into the world in hopes that they can get a job and get their life to moving. But a lot of times you go to college for, different types of, degrees. You got to be a little bit more smarter from what I can tell going forward when it comes to what major you pick, right? Those regular majors that, don't really have any specificity to them, that really is not what the new world is about. It's going to be tough for you to get employment out here in the world. You got to take a different look at the landscape around you out here in America right now. You got to be tech savvy. You got to be AI savvy. If you are in the finance, you got to be you got to be financial literate to kind of know what you're doing in that space. Healthcare, that's kind of like a woman's lane, so to speak. So, and I'd say men can't really get into that, but the majority of the folks that's in the healthcare field are females. So you got technology, you got finance, you gotta be strategic. You can't be out here playing checkers. You gotta play chess. It's a new world, and it's only starting to become more of a new world. Like they said, millions, hundreds of thousands of people are getting ready to start losing their jobs because of AI. People just kind of glance past that and be like, okay, whatever. but in a minute, you're going to find out the hard way. And you don't have the skill set, or you're going to be playing from behind. You're going to have to play catch up to the folks who are in this space, who are paying attention to technology, who does have a wherewithal when it comes to AI. So at the end of the day, you got to kind of reprogram yourself. You know, if you're young and you're getting ready to go to college, you got to start thinking about this thing a little bit differently. You can't think that things are like what they used to be, because they're not, folks. You know, it's going to be hard for you to, graduate with a political science degree or criminal justice. You might be good there because there's always going to be criminals, jails. So that lane you might, but then, what kind of income is that going to, entail you? You almost got to kind of, with those majors, you almost got to go to law school, in order to kind of get out here and do your 1-2. But the rest of those, you got to start looking into engineering, business, the things that make the world go around, so tap into, really look at the income when you graduate. Like, how much can I really make if I go down this lane as a student when I graduate? If it ain't six figures or in that six-figure range, you might want to kind of, rethink it. You might want to start a little bit earlier in high school as well, because there's a lot of things that you can be doing in high school to prepare yourself for college. So, you got to be strategic when it comes to what you want to do out here in this world going forward, because it's not a game, folks. It's real. It truly is real. And every day, as you can see around you, if you're paying attention, it is not getting easier. And if you are a person of color, you really, they always say you got to do 3 times as much more than your counterparts. That's just going to get deeper, because you got your competition. They understand the new world, the new technology. As colored folks, or people of color, I didn't mean to say colored folks, but people of color, you got to pay attention to what's going on around you, because you won't get left behind. I promise you, it's going to happen. And the way that they're kind of going about it, you might get left behind, and you might not even be able to catch up. You might end up just being in the statistics of, underpaid, unemployed, and it might just be like that because you don't have the skill set of the new world order that's daily rolling out, in front of us. So I would say be more strategic in what you want to do in your life, going forward, because, it ain't just the age group that I just mentioned, 22 to 27. In a minute, we're gonna probably get a new kind of poll out that's gonna kind of get off into ages that's, older than that, and how crazy that they're doing when it comes to, unemployment, because they are going to be more so the first ones that, take that lick that's getting ready to come, because they're going to get rid of the old folks first. I mean, it might be age discrimination or whatever the case may be, but, they're going to be looking at the younger talent, because more so than the older talent, the younger talent does, and they are more familiar with the new technology that's, moving the country forward. All right. So we'll definitely keep an eye on that, and, report back if anything new comes down the pipe. All right. But let's keep it moving. Uh, Uncle Nearest, a brand built on the legacy of a freed slave whose formula was stolen by Jack Daniels, faces a lawsuit after defaulting on their $108 million loan. The company is on the verge of being taken over by a third party. This is crazy. Uncle Near's the premium whiskey brand built on honoring the legacy of Nathan Nears Green, a formerly enslaved man whose distillery, hold on, where is it at? Expertise shaped the recipe later used by Jack Daniels, is now facing a severe financial crisis. The Tennessee-based company celebrated for both its award-winning spirits and its mission to correct a long overlooked chapter in American whiskey history is battling a lawsuit after allegedly defaulting on a $108 million loan. According to recent reports, the default has triggered proceedings that could result in the business being taken over by a third party, placing its independence and brand vision at risk. Founded to shine a light on the true story of the man widely regarded as the first African-American master distiller, Uncle Nearest has grown rapidly in the recent years, earning acclaim in the spirits industry. However, the financial strain from the massive debt raises concern about the future of one of the most prominent Black-owned liquor brands in the world. For supporters, this crisis represents more than just a business setback. It's a fight to preserve the legacy of a man whose contributions were hidden for generations. Uncle Nearest admitted that their CFO lied on the loan application to the tune of $50 million, saying they had $71 million in whiskey reserves and only had $21 million. The CFO has been fired. All right, see, that's what. Come on, guys. Why are y'all playing on this man's name like that? Why would the CFO do that? What this is what I'm talking about. Why do people think they can get away with this kind of stuff? These banks are not stupid. I work for the banks, been working for them forever. You're not getting away with this kind of stuff. 70 million when you only had how much they say 21 million in reserves. You tell them 71 million, that's a $50 million gap. You don't think they're gonna figure that out at some point? Like, do you really think, especially being a person of color, that they're just gonna sit back and let you, get off with 50 million? Just say you worth 70 million when you're only worth 20 million. You don't think they're gonna figure that out and come back and slap you in the face like they're doing right here, right now? This is crazy. Why would you even do it? Why would you put the brand in a situation like this where this is historic? This is a historic brand. I just not too long ago, less than a year ago, I was seeing whoever the lady, I think she might be the CEO or was the CEO, I don't know. But she was all over the place, big up in the brand. The brand was getting notoriety. It was on commercials. It's on TV. It was a brand for people of color to be proud of. And then behind the scenes, you got somebody over there trying to cook the books. You're not cooking the books with these people. I'm telling you that right now. I just did. 15 minutes ago, we just talked about another guy who was trying to cook the books. He cooked the books all the way to 40 million. Now you got these guys cooking the books saying that they're worth. You could have just said, okay, we're worth 20 million, 21 million, and got a loan for what, 80, 75 million, did what you needed to do, then came back to the table, re-up, and kept it going. I don't understand why everybody feels like they can be dishonest when it comes to this money thing. You can't be dishonest when it comes to this money thing. They're going to figure it out. They got checks and balances as well. You think that as soon as you get done doing your big one in your mind, you think that they just take all that information, take it at face value, and then they just go away. You don't think they go back in, they look, they figure it out, the, the way you paying because you didn't got such a big loan. So that means you got to make your monthly payments are going to be higher because instead of getting a lower amount that you can actually afford, you had 108 million thinking that, your ish don't stink and you're going to be able to make all this money and be able to pay your bill. No, bro, that ain't how that works. You're going to put yourself in a situation you can't predict the future. You can't predict what your sales are going to be. You don't know how people are going to spend. You got a president that's putting tariffs on everything. Now your whiskey, they stopping your whiskey from being sold in certain places like Canada. You got to be expecting all that. And as soon as they see, they may mess up on the front end. They may miss something, right? But as soon as you put yourself in a situation, they're gonna circle the block. When they circle that block and they come back and they see what they apparently saw here, this is what's gonna happen. They're gonna take your company, they're gonna allow somebody else to run your company to the ground, in the ground, and your brand, this man who was enslaved, who already took a hit because Jack Daniels stole whatever he stole from allegedly from them. And you know, you get that back, you get back on the road, you get the brand back up, you got all the notoriety, folks like it, people buying it, and now we got to hear these kind of headlines, right? It's just sad. Anyway, we'll keep our eye on it and we'll come back. I get disgusted at things like that because once again, you get an opportunity as a person of color to do something big, to do something generational, and just because you get greedy, this is what you end up doing to a brand who's on its way to being a household name in the Black community. Now you just got, from the looks of it, you just got the brand taken away from you allegedly, because they bringing in anytime you hear third parties and this and that, you're on your way out. And plus you already knew they wanted to. That's the other thing. You knew they wanted it. They're watching you. You have this notoriety. You in the space. You taking market share from the Jack Daniels of the world. They're watching, just anticipating you doing something that's going to knock you off of that pedestal. And then you got this funky CFO in the back room cooking up the books. Diabolical. Crazy. Anyway, let's keep it moving. All right. Da 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 da. Let's talk about the NBA. All right, so follow a strict schedule to watch NBA games. Look at what that's going to be looking like going forward. So the NBA has set a new broadcast plan for the 25-26 seasons, and fans will need to follow a day-to-day schedule to catch games. On Sundays, games are going to be on ABC, NBC, Peacock. On Mondays, they're going to be on Peacock. Tuesdays, they're going to be on NBC and Peacock. Wednesday, they're going to be on ESPN. Thursday, they're going to be on Prime Video. Friday, Prime Video and ESPN. Saturday, Prime Video and ABC. This shift means no single network will carry everything. Fans must juggle ABC, NBC, ESPN, Peacock, and Prime Video to watch games all week. It's a move that reflects the rise of streaming and the NBA's push to spread coverage across multiple platforms. So the day, look, once again, technology reigns supreme. Streaming reigns supreme. That's just the world that we live in. Your comfortable way of doing things, you got to uncomfort yourself because, it's about that dollar bill at the end of the day. And you got all of these, groups that's, coming in and want to be a part of that NBA bottom line. So, it's kind of easier because you can stream. You don't necessarily got to have ABC, NBC, the way that we're so ESPN, the way that we're so used to kind of, seeing the games and when the games come on. Now you got Peacock, now you got Prime Video. This is a different world, folks. I'm just trying to be, the person that tells you as easy as I can possibly tell you that this is a new world. Things are different and they're becoming more and more different every day. You know what I'm saying? So you gotta be conscious of what's going on around you. We all love the NBA. They know we all love the NBA, like we all love the NFL. So they're going to play the game the way they want to play the game. They're going to, do contracts with streaming apps like Peacock and, Prime Video. That's just more money. It's more money coming into the NBA, more eyes, more ways for you to be able to watch the game, more ways for people out of the country to be able to watch the game. So I would just say if you're really an NBA fan, get your apps, together. You're gonna be spending more money. I don't even know, cable, whatever that is, plus streaming apps. You're gonna have to start making some financial decision. Do you want to have streaming apps? Do you want to have cable streaming apps? You just want to have it's a mess. You just got to figure it out if you really are a fan of the NBA. You know what I'm saying? So we'll keep our eye on that. We cannot wait. I know they got Jordan, that's going to be on some of these telecasts. It's a whole new, you got Shaq and Kenny and Charles and Ernie, coming to ESPN, so they're putting the pieces in place. It's just you're going to have to be on point in order to follow, and it's going to probably cost you a little bit more money monthly to be able to, keep your hand on the pulse of things. So if something comes up as time gets closer to the NBA, football's getting ready to start right now, so NBA is right around the corner. If something comes up, we'll take a look at it and we'll get back to you guys. All right, let's keep it moving. All right, so y'all surprised? The Trump administration has reportedly completed 47% of Project 2025, despite Trump's previously claiming he had no knowledge of it. We all knew that was a lie. Right now, we're about 6 months into Trump's presidency, and it has been an eventful one, to say the least. We've experienced massive layoffs, extensive tariffs, the dismantling of education, and civil unrest in just this short period, which is crazy. Ironically, all of these things were included in the Project 2025 initiative that Trump originally claimed he knew nothing about. According to The Hill, about 47% of the plans included in Project 2025 have been executed, with more, unfortunately, to come. An online tracker has been keeping score of exactly what things listed on P25, that's what we'll call it, P25, have already come to fruition. The website counts 317 proposals in total. So far, 115 are complete, including eliminating the U.S. Agency for International Development, banning transgenders individuals from serving in the military, and funding ICE for 100,000 detention beds. An additional 64 proposals are currently in the works, including cutting off government contracts to entities that enforce a woke agenda, privatizing TSA airport screenings, cutting off Justice Department and FEMA grants to states, and prosecuting local prosecutors who exercise discretion in deciding whether to prosecute immigration cases. The other 53% are on Trump's to-do list and will most likely come during the remainder of his presidency. These policies include requiring schools that receive federal funding to give all students the military entrance test, phasing out federal funding aimed at schools serving low-income children, allowing companies to evade paying overtime, classifying teachers and librarians as sex offenders if they discuss gender ideology with minors, and repealing child labor laws to allow teenagers to work inherently dangerous jobs. Many voters assumed that Trump was serious when he said he had no idea what P25 was and had no intentions of following it. But as we can see, the plan is in full motion. This is honestly so sad and disheartening. You know what? I'm so sick of this, man. It's just, I mean, like what? Child labor laws to allow teenagers to work in dangerous jobs. Like what person? I mean, they tell you who the person is who sat down, or the Heritage Group, I think is the name of the organization who put this together. And for Trump, you got to think about it like this, because to me, Trump's a lazy man. You know, a lot of times wealthy people that's been wealthy for so long and they have power for so long, they just become lazy, right? So somebody puts this in his face, and in his mind, he like, I don't have to come up with an agenda for the next 4 years. Here's the agenda. Let's execute. Hike, hike. Let's go. Right. And it's crazy because he probably looked at it as, these are similar to what Republicans want to do. I'm a Republican now. I can tell people I don't know anything about what's going on, where when I heard he didn't know, come on now. The people that's so close to him are the people who actually put this together. So if you had any kind of scruples, you knew he knew what Project 2025 was, when he was saying he didn't. But for him to implement it, and to have already implemented, a big chunk of it, it just lets me know he knew what it was the entire time. And I'm telling you, it in his mind, he was like, I don't have to think about this. I can just run this play. I don't have to come up with no policies. I don't have to, outside of, and a big border piece is in Project 2025 as well. I don't have to do any of that. I can have the majority of the country hating me because of this. But as long as I keep my base in play, then the rest of y'all, so be it. I don't have time to be thinking of stuff, as a president to try to make the world a better place. I'm going to go with the things and the play that these Republicans have been wanting to put in place for decades, and now they got the opportunity to do it. They're doing it. So to me, it ain't really like something to be alarmed about, because this is just what they do. They just want the world to be, in their minds, squeaky clean, whitewashed. Anybody else that they're doing away with history. It's like, I just want to see what the world looks like in 3 to 4 years. If we're fortunate enough to still be here, I just want to see what all of this that they're doing, how it's going to affect us going forward. That's what I want to see. I all these things that's happening, I want to see in 3 years what the world is going to look like, and if we as Americans are going to like where we are. I deem to say no. I think the world is going to be just in a fury in the next 3 to 4 years. It's already starting to happen. They're already starting to turn their backs on these types of laws and principles. And I don't think, it's going to get any better because they're not going to stop. They're going to continue to steamroll through like they've been doing. And if you don't have a party, now you got, sounds like Democrats might be waking up a little bit. Midterms coming. Hopefully, things can swing back to the Democrats in the House and maybe in the Senate where they can kind of hold this guy accountable. They can start bringing some things up, to be investigated, and just have some checks and balances. Because right now there's no checks and balances. They just doing what he got to Senate, he got to House, so and he's the president, so he's just running amok. And at the end of the day, elections have consequences. So, it ain't his fault that people didn't get out to vote and keep the House or Senate to, you know, provide those checks and balances that is needed, with a person who's power hungry. But we'll keep an eye on it. It's sad that this is going on, but it was to be expected, right? All right. So what we got? The Department of Justice will begin to send Epstein files to Congress on Friday. So we'll definitely kind of keep an eye on that, see what that's about. I think this is about to be pure shenanigans. I think this guy right here, he's a Republican, and they're all acting as if they're just gonna roll this out, knowing that the president is probably allegedly all through it, up and down. They're gonna hide. They're gonna. It's gonna be a mess. Watch and see what I tell you. They make it seem like this is what everybody wants, but once this rolls out, they're going to be doing everything in their power to water this down. Watch and see what I tell you. But we'll keep an eye on it, and we'll get back and let you know. All right. I thought this was a little interesting. Where is it at? The African Union has called to replace the outdated 16th century Mercator map, which distorts Africa's true size with the equal Earth projection. I didn't even know nothing about this. So for hundreds of years, classrooms around the world have relied on the Mercator projection, a map created in the 1500s to help sailors chart trade routes. While it made navigation simpler by keeping straight line paths accurate, it came with a major flaw. It distorted the actual scale of the continents. Land masses like Africa, South America, and Asia were shrunk down, while Europe and North America were exaggerated in size. These distortions did more than confuse geography lessons. They influence how people perceive global importance and power. A striking example is Africa, which is about 14 times larger than Greenland, yet the Mercator map shows them as nearly like the same size. In response, the African Union is pushing for the adoption of the equal Earth projection, a map that presents continents in their real proportions. This change goes beyond cartography. It's a step towards reshaping perspectives and ensuring that regions long minimized on maps are finally seen in their true scale. So yeah, this one threw me off a little bit because I didn't even know, but Africa is huge. You can fit like certain, I think they was doing like a breakdown. You can fit like, major countries inside of Africa, multiple countries inside of Africa. And for whatever reason, the maps don't show it that way. So I'm really gonna keep an eye on this one because that's important. I mean, we don't know a lot about Africa because for whatever reason, being here in America, Africa is just, where, folks say we were brought to America from. But we don't really have a lot of, knowledge about it. It's just like this. Who knew? I know I didn't know. I guess you could think about it. Its continent is, it's huge. It's multiple, continents inside of Africa. So that part, but you don't really think about how, folks dumbed it down on the map to make it seem smaller, for whatever reasons. And all the other countries like, North America, Asia, it just makes it seem like it's those places are much bigger than Africa. So we'll keep an eye on it. I'm gonna do a little bit more digging because I'm interested just off of general purpose. And once I do a little bit more digging, I'll get back to you guys and let you know. All right. Okay. All right. So that's the end of our our play-by-play articles. Let's go through our 4 new viral mortgages and real estate hacks. Equity harvest, refinance instead of selling, refinance a rental, pull out tax-free cash, and keep the cash flow going. Great, great, great hack. Seller second combo, pair a smaller seller finance second mortgage with a traditional lender to reduce your down payment dramatically. Sweet. The BRRR with ADUs add accessory dwelling units during a BRRR project to supercharge appraisals and rental income. And the Airbnb arbitrage partnerships lease underperforming properties from tired landlords, furnish them, and cash flow via short-term rentals, no mortgage required. That is huge right there. That Airbnb arbitrage partnership, more folks need to dive into that. Because like it says, lease underperforming properties from tired landlords and then furnish them and cash flow them via short-term rentals. And that way, there's no mortgage required. You can get money. You just got to have a relationship with the landlord who doesn't care about that and allow you to do it. Sublease, so to speak. Well, not even sublease, just allow you to run Airbnb out the rental. As long as he's getting paid every month, it shouldn't be an issue. So that's a great hack right there. If I was you guys, I would definitely look into that one right there. All right. All right. So we're going to get into our deep dive here. Let's see. Here. All right. All right. Okay. I'm going to fade the black, bring them up.
Welcome to the deep dive. Today, we're stepping into the pretty dynamic world of real estate investment.
Yeah, high stakes for sure.
Definitely.
Yep.
And finding the right capital, the right partners. I mean, they can make or break a deal, right?
Absolutely. Speed, flexibility, being able to scale, these are constant challenges for investors.
Which brings us to today's focus. We're looking at RCN Capital. The question is, could they be, an answer to some of these hurdles? We're going to really dig into RCN Capital. They're a nationwide private direct lender, and they seem to play a pretty big role in real estate finance.
Right. And just so you know where we're getting this from, we're diving straight into RCN's own materials for this one.
Ah, okay.
Yeah, their loan programs as they list them, partnership stuff, resources they offer. It's all from their side, how they present themselves.
Got it. So our mission today is pretty clear then. We want to break down exactly what RCN Capital puts on the table, figure out where they fit in the lending landscape, and pull out the key insights for you, the investors and pros listening.
Sounds good. Let's do it.
Okay, so first things first, let's get grounded. Who exactly is RCN Capital? What's their basic story?
Well, they kicked off back in 2010, and their core thing is being a private direct lender.
Direct lender
Meaning they use their own funds, make their own decisions in-house. They're not just a middleman farming it out.
Okay, that's a key distinction.
Yeah. And they lend pretty broadly. Real estate pros, commercial contractors, developers, small business owners too, all across the country.
Nationwide. And how do they reach all those different people?
They kind of have a two-pronged approach. Retail, so investors can go straight to them, and wholesale, where brokers or other lenders can use RCN's capital and platform.
Okay, makes sense. Covering different channels. So if they cater to diverse clients, are their loan programs just as varied? What kind of financing are we actually talking about here?
Oh, yeah, they offer quite a mix. You can sort of group them into short-term and long-term options. For short-term, you've got your classic fix and flip loans. That's for buying a property, fixing it up, and selling it fairly quickly. Non-owner occupied, of course.
Right, the bread and butter for many flippers.
Exactly. Then, maybe more for scaling your portfolio, they have long-term rental loans, often called DSCR loans.
DSCR, I hear that term a lot. What's the key thing there?
DSCR stands for debt service coverage ratio. The really important part is that eligibility is mostly based on the property's income potential. Can the rent cover the mortgage payments?
So less about my personal income and debts.
Generally, yes. It focuses more on the asset itself. This is huge because it means you can often acquire more properties without maxing out your personal debt to income ratio. It lets you scale faster.
Okay, that's a big deal for portfolio builders. What else?
They also do multifamily financing, both short and long term, for properties with 5 or more units, and new construction loans too.
For building from the ground up.
Yep, short term financing specifically for those ground up projects, critical for developers.
Gotcha. And you hear these called hard money loans sometimes, right? And what does that actually mean in this context?
That's right. And hard money can sometimes sound a bit, well, rough. But really, for pros, it's a strategic tool.
How so?
The hard just refers to the hard asset, the property being the main collateral. It allows for much faster funding, more flexibility than traditional banks, especially for deals that need quick closing or maybe don't fit the standard bank mold.
Okay.
So, yeah, you can use them for purchase, refinance, renovation funding, even bridge loans to cover gaps. But like any loan, the final terms depend on the specifics, loan type, verification, risk factors.
Right. Standard caveats apply. Okay, so they definitely have a wide range of tools,
Mm,
but the lending space is crowded, super competitive.
it really is.
So if I'm an investor looking around, what makes RCN Capital, different? Why pick them?
That's the key question, isn't it? I think a few things really stand out from what they promote. First is speed.
How fast are we talking?
They claim they can close in as few as 10 business days.
10 days. Wow.
Yeah. And think about what that means. In a hot market, deals disappear fast. That kind of speed isn't just convenient, it's a real strategic edge. It could mean getting a property others just can't move quickly enough on.
Opens up more opportunities, definitely. What else?
Their underwriting philosophy, they call it common sense underwriting and mention in house approvals.
Common sense.
Yeah.
Sounds good, but what does it mean practically?
Well, it suggests they look beyond just, say, credit scores or rigid DTI ratios. They might focus more on the deal itself, the property's potential, your experience, the exit strategy.
Right, so maybe more flexibility for deals that aren't perfectly conventional.
That seems to be the implication.
Yeah.
Could be helpful if your financial picture isn't standard bank box material or the deal is unique. The in house part reinforces that they make the decisions themselves, which ties back to speed.
Okay, anything else?
They also highlight customer service, aiming for a high level, and something important for brokers or people who refer business. They emphasize broker and referral protection.
Ah, so they value those relationships.
Seems so. And finally, their reach. They are nationwide. They mention specific licenses in states like Arizona, California, Minnesota, Oregon, and offices on both coasts and in the Carolinas.
So potential to support you, even if you're investing out of state.
Exactly. If you're looking to expand geographically, that nationwide footprint is a big plus.
That speed, though, going back to that, 10 days is incredibly fast. Are there like trade-offs, things an investor should be aware of with that kind of velocity?
That's a fair point. Generally, faster, more flexible money like this hard money or private lending often comes with higher interest rates or points compared to a conventional bank loan that might take months.
Okay, so cost versus speed and flexibility.
Right. You're paying a premium for that speed and the ability to finance deals, maybe distressed properties or quick flips that banks often won't touch or can't close fast enough on.
And the common sense underwriting, how does that really play out for someone with, say, a complex situation?
It usually means they're putting more weight on the asset and the deal. What's the property worth after repairs?
Hmm.
What's the projected rent? Is your plan solid?
Uh,
So if you've got a fantastic deal lined up, but maybe your credit isn't perfect or you're already leveraged personally, this approach might still get you funded, where a traditional lender focused only on your personal metrics would say no, the property carries more weight.
okay, that clarifies it. It really feels like they're positioning themselves not just as a lender, but almost like a strategic partner.
Yeah, it seems like they're aiming for that. And they have programs that specifically point in that direction beyond just the loans themselves.
Like what kind of programs?
Well, they have a broker referral program with different levels depending on how involved the broker wants to be.
Okay.
There's also a correspondent lending program. This is interesting. It's basically for other, maybe smaller private lenders who want to grow. They can access RCN's capital and back office support.
So helping other lenders scale using RCN's infrastructure.
Exactly. And they also mention having a network of preferred vendors.
Those contractors, appraisers, that sort of thing.
Yeah, trusted businesses they recommend to help streamline operations for their clients, saves you some legwork and potentially reduces risk.
So it really is about building more of an ecosystem around the financing. That adds definite value. What about education or tools? Do they offer things to help investors get smarter or more efficient?
They do actually
Yeah.
quite a bit in that area. They have something called Amplify Your Education.
Okay.
It's a free, self-guided training platform focused on helping wholesale partners learn about originating real estate investment loans. Practical skills development.
Nice. Free training is always good.
Definitely. They also have a document library, pretty straightforward, a place to get the paperwork you need for loans, makes the admin side easier.
Standard but useful.
Yeah. And they offer guides on real estate investing terms, just simple explanations to help you, grow your vocabulary in the industry.
Good for beginners or even refreshers.
And then there's a tool called the Rehab Budget Builder.
Well, that's practical.
Yeah, it's designed to help you analyze deals, figure out a realistic scope of work for renovations, and estimate your potential ROI more accurately. Planning is key, right?
Absolutely. Poor budgeting sinks a lot of rehabs.
hmm And they also have a blog or recent articles section with practical tips. They mention topics like needing an asset manager or how to pitch hard money loans confidently to your clients if you're.
So a real commitment to ongoing education, it seems.
It looks that way, trying to provide value beyond just the loan check.
Okay, so let's try to wrap this up. Summing up our deep dive today,
hmm
what's the big picture on RCN Capital?
Well, they really come across as a comprehensive, direct lender. It's not just about offering a variety of loan types, though they certainly do that.
Right, the fix and flip, DSCR, multifamily, construction.
Exactly. But it's also about the speed, the potentially flexible underwriting, and then this whole layer of support, the partnership programs, the resources, the educational content.
So they're aiming to be more than just a source of funds, more like a toolkit provider for investors and real estate professionals.
I think that's a good way to put it. Yeah, a toolkit and maybe a pathway to help you expand your operations, whether you're flipping, holding rentals, or developing.
So what's the takeaway for you, our listener?
I think the main thing is understanding that lenders like RCN Capital exist, offering specialized services. Knowing the full spectrum of what's out there beyond just traditional banks, that can honestly be a game changer for your strategy.
How so?
Well, whether you need that fast, flexible financing for a specific deal, or you're looking for ways to partner up and scale your business, or even if you just want to deepen your knowledge, knowing these options exist puts more tools in your belt. It helps you stay competitive and maybe see opportunities others miss.
Right. It broadens your potential playbook.
Yeah.
Which brings us to a final thought to leave you with. Given everything we've discussed, the speed, the specialized programs like DSCR, the resources offered by private lenders like RCN Capital, how might rethinking your approach to financing, maybe looking beyond just the usual bank channels, how might that unlock new possibilities for you? Could it accelerate your next deal or help you tackle those more complex projects you've been considering, especially if scaling is your goal?
Yeah, definitely something worth mulling over. How could
Mhm.
different capital strategies change your trajectory?
Exactly. Food for thought as you plan your next move in the real estate world.
All right, we're back. We're back. We're back. Let me get this out of there. Okay. All right. RCN Capital, a giant in private lending. They funded thousands of real estate transactions nationwide. They definitely work with investors. They got flexible loan programs that traditional banks just won't touch. Literally, I'm doing a deal with them right now. Just got off the phone with Bailey. We're doing a deal in Cleveland. They've been exceptional. They're a great lender. So, from fix and flip loans to rental property loans, bridge loans, RCN has built a reputation as a go-to lenders for investors scaling portfolios fast. Um, so if you get an opportunity, you want to reach out to them. Like I said, I got the plug over there. Done deals with them, doing deals with them right now. So just let me know, DM me, email me, whatever. Let me know that you got something you need them to take a look at, need me to take a look at, and we'll go from there. But that's a wrap today for the Mortgage Mayhem podcast. If you learned something, share this episode. If you got thoughts, drop them in the comments. I want to hear from you, from us everywhere at Mortgage Mayhem Podcast. Subscribe to our YouTube channel. Hit the bell for alerts and check out exclusive clips that are on YouTube in the shorts. We'll be kind of doing some Patreon stuff later on where we'll have some behind the scenes stuff. Especially I would say in the month of October, we got some stuff that we got planned that should be great for you guys. I'm G Money, your humble host. And remember, in real estate, you either play the game or get played. You know what I'm saying? You either play the game or you will get played. But with that being said, I'm out. I'll see you guys next Tuesday. I appreciate seeing a little traffic today, more so than I've seen in the past. So I'm excited about that. People are slowly but surely starting to tune in. I mean, I ain't doing nothing special. We're just talking about things that I want to talk about, giving you guys some of the best mortgage hacks in the industry, bringing forth all kind of lenders and all the. If you're not paying attention, that's is shame on you, because if you really are an investor out here that's trying to broaden your portfolio, or you're just trying to get in that mix, so you can potentially start building generational wealth. I may talk about other stuff, current event stuff, but when I get to, the mortgage piece and, the mortgages piece and the lenders and different folks that I bring up for interviews for you guys, you missing out on a lot. I mean, a lot. the mortgage hacks alone, like I said, we've done a couple hundred of those by now. So, if you just go through and listen to those, you can pretty much set yourself up for success just through, the mortgage hacks, not to mention a couple interviews we've had from professionals that's in the industry that's, giving you all kinds of information. So with that, I would like to say I'm out, and we will see you next Tuesday. Have a great week, great weekend. Be safe out there, but I'm out.